Hi traders, I did a series on how far the Dow can plunge last week, so I'm just going to follow up from that. But I'm going to start by looking at a couple of other indices first. This is the Nasdaq on the daily chart, and you can see a couple of days of selling. We had this topping pattern up here, started to get some very small bars. It just couldn't do it. And we had divergent RSI, so the divergences in the market, and then Thursday, Friday we just dropped and we found support on the 50 EMA. It's a hammer-like bar there on the Nasdaq daily. If we now look at the German market, this German market is way ahead of the sell-off in the US, and you can see we started selling up here at the 127 extension that I've got on this fibs. I think the fibs are taken from, actually the fibs seem to be somewhat out of date, I have to say. It seems to be taken from here and here. So we dipped underneath it, ran up into 127 extension and really struggled up there. Struggled all through May, June and July, and then finally we started to come off, break that support, and then Thursday, Friday we tumbled right down to this support down here. So where does that leave us with the Dow? Let's look at the Dow, seeing as I spent so much time looking at that last week. This purple bar here is the end of 2013. This low here is the 2014 low, and then I've got this channel set from major support lines and major resistance lines in this move. And here we are. We've closed under the midline of. This isn't a midline, but it's a major tier channel support down there, and we've closed underneath it. We've slightly ducked under 16,500. Ultimately, I think over the next couple of years, I would expect this to come all the way down. Let's have a look at the weekly. This is the fibs I've got on the March 09 lows and the highs of 2 weeks back. Ultimately, I think over a period of a couple of years, as the markets get used to higher interest rates, interest rates can only go one way. They're virtually zero in the US. And as the economy picks up, it's not picking up at a tremendous rate at the moment, but it is nonetheless growing and is picking up. We're going to at least come down and test the 50 EMA on the weekly chart, bounce back into resistance, and then over the next couple of years wiggle our way down. Why do I say couple of years? Because we traditionally have a 5-year bull run followed by an 18-month to 2-year bear, and we are 5.5 years from March 09. So we've overstepped the mark here in terms of timing, and so I would look for a move back to something like at least the 14,000 mark, and possibly lower. That's going to take time, and you can see once we get here in 2011, we get a sell off into the summer, and it takes us to the back end of October before we get any kind of bounce. Now that could be what we're looking for here. We could end up with a slow summer, and then into October get some sort of bounce back up. I'm looking for this market to step down, not to run down. Alright, now that's already quite a fierce sell-off for 1 week, so we need some sort of pullback to get into this, and the pullback area I'm going to suggest is the low from the week beginning the 7th of July. That would put us at 16,770. May not get that high. We may struggle to get up that far, in which case we may only get to a third of that bar, 16,630. is, I have to say, more likely, given that that down bar was so aggressive to the downside. So what I'm looking for is symmetry from this move here, which will take us down into 16,130 short term. Switching on to Forex, we've got UK and European rate decisions on Thursday. Any hint that the committee in the UK are earing towards rate rises, and this could see a major bounce in the pound. So here we've got the pound US dollar. I can see already at a major level here. 168 is a major fib level. This is, you know, a very, very nice move up here. Now we had 1, 2, 3 waves. This is an A wave correction, so we could be due a B wave move back to the upside if this 168 holds, at which point we could see this come down for a C and then a D wave. Okay, so 1, this is Elliott wave, 2, 3, A, B, C, actually A, B, C, D, yeah, D wave could see this running up hard. Okay, if the UK is the first of the G7 to raise rates, the pound could potentially move up quite sharply. So what am I looking for? I would, anything around this area here is a potential buy area. If we get any, on the basis we've got extreme RSI, if we turn around here and put a hammer on here on Monday, I would buy and hold into Thursday and see where Thursday leaves us. Otherwise, I'll stand aside, see where the close is on Monday. If we get any kind of hammer-like bar, I would look to buy this. Otherwise, in the meantime, just carry on shorting it. Whilst the equity markets are so weak, the dollar's getting bought. It's still a reserve currency, and seasonally, this is the time for the pound to drop. So let's see if that continues and where we end up on Monday. So I'm just looking to see if this fib level can hold and we can push back up at least to 169, 170. Pound yen, of course, needs to come into this as well. Pound yen is at the 50%. So drop to 171.70 or even 171 will be a great place to get in. This is normally what I would call this is potentially the recovery zone. We've had all this buying. 1, 2, 3, A, B, C. That doesn't quite work anyway. Elliott wave is notoriously difficult, well, personally anyway, for me to sometimes pick out. You can pick Elliott waves any way you like, really. That's the downside of Elliott wave. Anyway, the point is, we have fibs on the last big move from the May lows to the July 3rd highs, sitting on 50% after 2 days of significant selling, having bounced off that fib zone, and now we need to see if we're going to continue that move. At the moment we are still in a short-term downtrend. If we can pick up a low down here and we see it hold, I would look to buy that and see if we can get in there, because we could ultimately get up to 177 and so on. I'm essentially a pound bull, but I am aware this is a season typically that you will see pullbacks in a run like this, and at the moment we are not holding up. I just want to see if that fib level can hold. So I'm standing aside waiting for that to happen. If you look at the weekly, we've got this massive trend line down here which would see support at 171, so that would concur with the fibs analysis on the daily. And this is a major trend level that is holding nicely. Were that to come down and get touched, then I would expect that to push back up. Right, Euro Yen is interesting. We had this drop this year from 143.50. It come down to close to the 136 fib support from the February low. Retesting the 50 MA with a potential reversal bar. We break 137.50, and that could be that. Next time we come and touch this one, we could give a nice push into that 50 MA. We've already tested the 50 MA twice, so we could, if we hold here, 137 holds, we could turn around and start closing above that 50 MA. But break at the moment, this is just a pullback in a downtrend, and any break of 137.50 could see that tumble back down to these levels here. So I'm just waiting till the Monday close. Monday close is important. If you look back here, this was the Monday close last week. I'll put a range around it. That Monday range held and we finally pushed up on Wednesday into that resistance level. And that's what I'll do this week. I will wait until we get the Monday range, mark it off, and see if I can tell from my analysis what direction that is most likely to go in. Right, quick look at oil. Oil is, for me, is in this big box from 105 to 98, 99 level. We dipped out of here before. So we dipped out of this box from the bottom, and we dipped out of this box from the top. This is a hammer-like bar, so I'm going to leave it because I want to see if I can get a repeat. I can get symmetry from over here. If we shuffle sideways and don't close underneath that level there, I will start to nibble on a buy, and then see if we can get back in the box, at least run back to the 100 level and potentially back to that midway line. Gold, I'm standing aside. It's just potentially a bear flag for me. And that was a push up, but the highs, we just keep selling into that level, and we could ultimately just come all the way down to that support. So I'm staying out of it. A strong dollar would ordinarily kill off the gold, and at the moment we are certainly very weak. What would make me buy? What would make me buy is this. We come down to 12.78 and hold, put in a reversal bar. I would look to see if I can push that back up to 13.50. Right, I'm going to leave it there. No other significant. I was looking at pound Aussie dollar last week. Friday saw us close underneath, completely engulf Thursday's range. So I'm out of this at the moment and looking to see what that wants to do. But if we can just come down into this level and hold, I'll consider buying down here, see if we can push back up. Okay, I hope that helps. Traders round table on Monday will be dominated by stock scanning. I'll be looking at setups that are going to work in this sort of market now. It's a game changer. Based on analysis this time last week and the results of last week, this is a game changer. So I'm going to talk about how I'm planning on handling stocks and currencies in this market. And I hope you'll join me and look forward to seeing you then.